All right, today we're digging into a really important new report. It tackles a persistent problem right at the heart of California's housing market, what's being called the home lending gap.
We hear about the California dream all the time. But this new analysis of mortgage data, well, it really makes you stop and ask a tough question. Is that dream of owning a home really within reach for everybody in the state?
Okay, to even start to answer that, we have to understand the scale of the problem. So, let's just get right into the numbers. Okay, so this new report comes from the nonprofit Latino Prosperity, and it points out that Latinos are now the largest demographic group in California. We're talking nearly 38% of all adults.
But, and this is a big but, when you look at who's actually getting loans to buy a home, that same group received a way smaller share, only 31%. And that difference? That's the gap we're talking about.
So when you see it laid out like this, it really hits home. That's a nearly 7-point gap between the share of the population and the share of home loans. Now, the report is fair. It does point out that this gap has gotten smaller over time, but it's still a pretty significant hurdle for sure.
So, what's going on here? If Latinos are such a huge part of the demand for homes, what's causing this imbalance? Well, to figure that out, we've got to look at who is actually doing the lending.
And that's exactly what the report digs into. They analyzed data from the top 25 lenders in the state, and what they found, it points to a pretty clear divide in the lending industry itself.
And wow, the data shows a super stark contrast. Check this out. Among the state's 6 biggest traditional banks, just a little over 11% of their home loans went to Latino borrowers. But then you look at non-bank lenders, and that number jumps to over 30%. I mean, that is a massive difference.
But here's where it gets even more nuanced. It's not a uniform story, even inside that big banks category. The performance just varies, like dramatically, from one bank to the next.
Just take a look at this breakdown. You've got JP Morgan Chase leading the pack, with 21% of its loans going to Latino homebuyers. Pretty solid. But then way down at the other end of the spectrum, you see Wells Fargo at just 6.8%, and then Citibank at the very bottom with only 5.3%. So let's just focus on that number for a second, 5.3%. To really put that into perspective, Citibank's rate is less than 1/4 of the average for those non-bank lenders we just talked about. That really highlights just how deep this disparity runs at some of the country's biggest, most well-known financial institutions. So, this story isn't just about which company you borrow from. Nope, it's also about where you live. The report actually maps out these lending patterns, and the picture it paints is, well, it's one of profound regional inequality.
All right, let's start in the San Francisco Bay Area, one of the most expensive housing markets on the planet. Here, just 8.6% of all home purchase loans went to Latino borrowers.
Okay, now let's head down south to Los Angeles, which has the largest concentration of Latino households in the entire state. The rate there, it's higher, sure, at 19%, but that's still way below their share of the population.
But then you go to the Inland Empire, and the story just flips completely. Here, the rate is 38.6%. All of a sudden, in these more affordable markets, the lending rate is finally matching up with the population. But, and this is the really critical takeaway, the report makes it super clear that even in places like the Inland Empire where Latino lending is strong, that lending is overwhelmingly being driven by non-bank lenders. The big banks, they still have a very, very limited presence. Okay, so we've seen the data, we've looked at the who and the where. Now we get to the most important part of all. Why does any of this matter? And, maybe more importantly, what can actually be done about it?
Well, the CEO of Latino Prosperity, Orson Aguilar, he puts the stakes in really stark terms with this quote. He argues that this isn't just about some numbers on a spreadsheet. I mean, home ownership is one of the main ways people build wealth in America. So this gap, it becomes a real barrier to economic mobility, not just for individuals, but for entire generations.
So with stakes that high, the report doesn't just stop at diagnosing the problem. It also proposes a path forward. The big question is, how can this gap finally be closed?
What the report lays out is basically a two-pronged approach. First, it calls on the banks themselves. It says they need to reestablish a presence, branches, in Latino communities and set some clear public goals for their lending. The second prong is for policymakers. It urges them to strengthen fair lending laws like the Community Reinvestment Act and, this is huge, to finally tackle the state's housing shortage by speeding up construction.
And so ultimately, all this data leaves us with a really fundamental question. California's demographics, they've already changed.
That's a fact. The challenge now is whether its core institutions, especially in finance and housing, can, and more importantly, will adapt to serve this new reality.